A blockbuster, a mega debut from a company that's not immune from tensions between the U.S. and China. Investors seem to be looking past the Pentagon blacklist and the shunning by U.S. investors when it comes to this battery giant.
Yeah, the CATL listing certainly is a big news for Hong Kong. That certainly needed a listing of this size, right? We're talking about the largest listing in the world this year. And, you talk about the trade tensions. It looks like investors are leaning away from that, right? They're focusing on, when it comes to technological innovation, the fact that they are, CATL, the EV battery champion here with close to 40% market share as well. So that certainly is what investors are hoping for, and really being overshadowed, as you mentioned, of these U.S.-China trade tensions, with CATL has been caught in all of it, right? You talked about the Pentagon blacklisting. There's also the fact that CATL excluded U.S. onshore institutions from taking part in this deal just to limit their U.S. exposure. That certainly is a good litmus test, according to Bloomberg Economics, of whether they can actually rely and not rely, I should say, on U.S. investors to seek global capital and to raise significant funds. But today, given the outperformance that we've seen, seems like that strategy has paid off so far.
This listing signifies our deeper integration into the global capital markets and marks a new milestone in our mission to drive the global zero-carbon economy. CATL is not just a battery component manufacturer. We are a system solution provider and are committed to becoming a zero-carbon technology company.
That was the founder, Robin Zeng, there speaking about, CATL being in the forefront there of this strategic technology and really trying to, this mission for a carbon-free world, right? Zero-carbon world, I should say. So they're planning to put CATL as a leader of that charge. Certainly, there's a lot of talk about the U.S.-China trade tensions. We talked about some of the things that the company has been doing, but really, ever more the reason for them to have this secondary listing, raising $4.6 billion in their international expansion. That's where the proceeds are going to be funding, especially in those factories in Germany, in Hungary, that 7 billion euro one that's being built right now. And as they also build up that EV battery material supply chain as well in Indonesia. So all these moves in some ways to avoid some of the U.S. tariff impact and really focus on markets that they can actually be profitable and more profitable than their business back at home has.
Yvonne, as you said, all this happening against the U.S.-China tensions. We know the likes of Bank of America, JP Morgan were caught in the crosshairs.
They were. And this was interesting, right? So leading up to this listing, we did hear from this U.S. Congressional Committee basically calling these banks out and saying, urging them to pull out of this IPO. In the end, they did not. They stuck with this deal. So it just goes to show it's not just foreign investors that are leaning towards this stock. I mean, banks as well have been trying to get a piece of the pie, right, when it comes to the underwriting side of things here. So certainly that's one thing to watch. And also, what does this mean when it comes to China's embrace of entrepreneurs and the private sector once again? The fact that this secondary listing happened here in Hong Kong, ultimately Beijing had to give approval of this as well. There's signs here that potentially Xi and his administration is warming up to more relations, better relations with the private sector and expecting it to help shore up growth here. Of course, this is a big, big shift from what we saw maybe just a few years ago when Ant Financial, that IPO, was pulled out.